Realty Income just touched down to a brand new, fresh 52-week low. This real estate investment trust is now officially offering investors over a 5.5% starting dividend yield. But with a recent massive acquisition that some investors seem unsure about, and the future of share dilution when it comes to the stock, along with the reality of higher than favorable interest rates, is this A+ REIT Realty Income a buying opportunity or a stock that needs to find some more support before entry? Well, in this video, we're going to do a deep dive into the monthly paying dividend stock, ticker symbol O, and answer all of this and more. Right after you, please drop a like on this video and subscribe for more future content like this. It finally did it. It finally broke the 52-week low, as it now sits at $54.76 per share. Realty Income over the last year is down around 19%, and year to date down almost 14%. But of course, it's only fair to zoom out. Realty Income, as far as all time, is up almost 590%. Now, before we dig a little bit deeper into what's been going on with Realty Income, some of the risks ahead, and what I think about it, let's do a little bit of an overview of Realty Income, just so everyone else is up to speed. Realty Income got its start in 1969 with a single investment in a Taco Bell. And now today, this REIT owns thousands of properties across America that are leased to hundreds of tenants operating in dozens of industries. Retail properties account for most of Realty Income's rental revenue, with industrial warehouses generating some of the additional. Now, all of Realty Income's properties are under a long-term triple net lease agreement, which means that the tenants pay for things like maintenance, utilities, and even taxes. Now, impressively, Realty Income has paid uninterrupted dividends since the firm's founding and has increased dividends each year since going public in 1994. But stay tuned, because we are going to look closer into the dividends in a little bit. To look a little bit deeper into Realty Income, going on the website, they have over 13,100 commercial properties under the net lease agreements, a 99% portfolio occupancy, which means basically, for the most part, every single one of their properties are being leased right now. Over 1,300 different cities and 85 different industries. This is a high quality REIT that is heavily diversified. Now, what's also crazy about Realty Income is that a lot of us actually step foot in Realty Income's properties, a lot more than we probably even realize. Realty Income leases to companies like Dollar General, Walgreens, Dollar Tree, 7-Eleven, Wynn Resorts, FedEx, LA Fitness, and many, many more, just to name a few. Now, this right here is maybe one of the most bullish aspects of Realty Income, in my opinion. It's the fact that the property diversification type is made up of mostly retail. Now, especially knowing the type of tenants that Realty Income leases to. These are tenants, these are businesses that are going to be around, whether the economy is good, whether it's bad. It doesn't get much better than leasing out your properties to recession-proof businesses. Now, just as of recently, Blackstone agreed to sell Realty Income part of its stake in the Bellagio, Las Vegas. Now, in a deal that values the casino resort at $5.1 billion, allowing it to realize some payback from Las Vegas post-lockdown rebound. Realty Income invested $950 million into this new joint venture that owns 95% of the real estate assets of the Bellagio. The publicly traded REIT will invest $300 million of common equity in the joint venture to acquire a 21.9% indirect interest in the property, and $650 million to acquire a yield-bearing preferred equity interest in the joint venture. Now, a lot of investors are not really sure about this new joint venture, and there are some risks that come along with Vegas. On top of that, Realty Income investors are worried about share dilution, as the company over time has consistently sold more shares for growth. And along with share dilution, the further concern of higher interest rates, which have gone on for a while now, and not knowing exactly when they're going to retreat. Now, the Federal Reserve has interest rates currently at 5.50%, which of course makes it very, very expensive for real estate investment trusts to borrow money to buy more properties and expand, or to even refinance current debt that might be close to maturity. But if you look right here at the Fed rate monitoring tool, this will show us all the exact probability of the future rate hikes or rate cuts or whatever's going to happen with rates in the future. And of course, this is all just based off probability. This is not necessarily for sure what's going to happen, but a lot of time the Fed rate monitoring tool is pretty much spot on. And what's crazy is that the Fed rate monitoring tool thinks that by the next Fed meeting in around 2 weeks, the September meeting, that we are officially going to see a pause in rate hikes, which is definitely pretty crazy considering the Fed has been raising rates, it feels like, nonstop for over a year now. But what's even more important and more of a reason on why I'm so bullish on Realty Income is looking at the future Fed meetings. In November, there's also a better probability of another pause in rate hikes, but there still is around 33.5% probability that there might be another 25 basis. But looking out even further from there, because of course I'm talking about buying Realty Income and holding it over a long-term time horizon. In December, it looks like there's still a very good chance that rates stay where they are. And then in January of 2024, it looks like more of the same. And what's important to notice is that as we get further and further out from where we're at currently, there's more and more probability that we'll actually see rate cuts in the future. So much so that by May of next year, which relatively speaking is not that far away, there's a really good chance that we could see interest rates down to 5%, 4.75%, or even maybe lower than that. So of course, where interest rates are going to be in the future, your guess is as good as mine. But the probability that there is going to be pauses in rate hikes and even the idea that the Fed might be cutting rates in the future is definitely very, very bullish for real estate. With all those risks, it's unsure to know what the floor will truly be for Realty Income's share price. Now, even though, as we saw here a second ago, Realty Income's share price does have the potential to really move up as we've seen historically, for a lot of long-term dividend growth investors, they're buying Realty Income at least partially because of the dividend. And if you look at Realty Income's dividends paid on the max time frame, I started buying my first few shares of Realty Income in around 2018. And during this time, Realty Income was paying just around 20 or 21 cents per share. Now, fast forward just a few years later, Realty Income is paying almost 26 cents per share every single month. And what's great about this is as Realty Income has continued to play on the offense and continue to acquire more and more high quality real estate, and then of course from there collect rent on a monthly basis, the investors of ticker symbol O have also been rewarded with bigger and bigger payouts on a monthly basis pretty much every quarter or so historically. Now, looking at Realty Income's up and coming payments, Realty Income has actually raised their dividend 2 times in the last 6 months. And with the current cadence that Realty Income has been raising their dividends, I would not be surprised personally within the next few months if Realty Income does another dividend increase. Looking at some more data, over the last 20 years, Realty Income has raised their dividend around 5% every single year, which is not bad at all for a REIT. This stock has 28 years of consecutive dividend increases and 54 years with an uninterrupted dividend streak, 54 years. Now next, I thought it would be interesting to look through the last earning results from Realty Income. And although these earning results ended in June 30th of this year, of course, I still think a lot of these company highlights are definitely relevant to give us an idea if or if not Realty Income could be a buying opportunity and a fundamentally strong company REIT moving forward. So the company highlights from the last earnings report, it says for the 3 months ended June 30th, 2023, the net income available to common stockholders was $195.4 million, or around 29 cents per share. Normalized FFO available to common stockholders was $688.3 million, or $1.02 per share. AFFO available to common stockholders was $671.7 million, or $1 per share. Invested $3.1 billion in 710 properties, and properties under development or expansion at initial weighted average cash yield of 6.9%. On top of that, Realty Income raised $2.2 billion from the sale of common stock, primarily through the ATM program, with a weighted price of around $61.89. Issued $400 million in 4.7% senior unsecured notes due December 2028, and $600 million of 4.9% due July 2033. Now, the net debt to annualized pro forma adjusted EBITDA was 5.3x%. Completed the previous announced sale-leaseback transaction with the EG Group of 414 single-tenant convenience store properties for $1.5 billion. Also very important, some CEO comments. The CEO said, "I am pleased with the results our team delivered in the second quarter," said Sumit Roy, Realty Income's President and Chief Executive Officer. "Our performance continues to be driven by our diverse, high-quality portfolio of leading clients. Our global pipeline of investment opportunities with favorable risk-adjusted return profiles remain active. During the quarter, we closed $3.1 billion of investment volume, and we continue to evaluate to expand into new geographies. Our investment efforts are supported by our well-capitalized balance sheet, which was further bolstered through a successful debut Eurobond offering back in July. In addition, we currently expect over $650 million of net proceeds from unsettled forward sales of our common stock to support our near-term growth initiatives. Given the current liquidity position and healthy investment pipeline, we are increasing our acquisition guidance over $7 billion. Combined with our well-performing real estate portfolio, which finished the quarter at 99% occupancy rate, our business returns position to investors, consistent cash flow, and compelling risk-adjusted returns. Now, for me personally, I've been buying shares of Realty Income consistently for years and years and years now, and my cost basis isn't too far away from where Realty Income is currently trading at as of right now. Now, do I personally think that we're going to see Realty Income's 2020 lows? Although I do happen to think that it might be possible, I also feel like the potential to reach those lows is still unlikely. And although Realty Income will most likely see some more pain in the near term, I do think for investors like myself, dividend growth focused investors that do have a longer time frame ahead of them, I think Realty Income will be back up into the $60 range and above within the next 1 to 3 years. But when it comes to Realty Income, the new 52-week low, all the risks and the potential opportunity that investors might have right here. Are you currently buying shares of Realty Income here, Or are you waiting for a better opportunity? Comment down below. If you enjoyed this video, make sure to please drop a like in it and subscribe for more future content like this. Thanks as always for stopping by, and if you are interested in investing, make sure to check out these recent videos I posted right here.